Is Denisha McDonald with Our Village Initiative. We are a social impact consulting firm, and our goal is to help increase the rate of home ownership in our community. So tonight, well, so far through the series, we've talked about the home buying process, budgeting and saving. Last month, we talked about your credit and what you need to do to improve your credit and to get the credit score you need for most lenders. Tonight, I thought it best to have, the person doing the work come in and speak to you guys. So we have a loan officer. His name is Mr. Wilfred Edwards of Needham Bank. He'll be presenting tonight to you guys about what you need to get a pre-approval, what that process is like, and then the different down payment assistance programs out there and the different lending products. Because depending on your income, depending on your situation, there's a lot of different loan products that you can use and may be beneficial to you. And different lenders have different products. So tonight should be very informative. Please, please, please ask questions. Put your questions in the chat so that we can get to them, because I want you guys to be able to take action at the end of this. There's a lot of money out there in terms of down payment assistance right now. So you want to make sure that you guys are getting everything in order to qualify for those. So without further ado, we have Mr. Wilfred Edwards of Needham Bank.
Good evening. My name is Wilfred Edwards. I'm a loan officer and vice president at Needham Bank. We have branches in the west of Massachusetts and right here in Boston and Mission Hill. I stated that because sometimes I'm told we don't know, we've never heard of Needham Bank. Where is Needham Bank and so on? Well, you have one right here in Mission Hill in case you need to ask any questions about any banking products. But this evening specifically to the mortgage. The content of this presentation is a large amount of information that must be delivered in 1 hour. The first part of the first half hour, I will blow through the necessary guidelines and information that I'm sure you have heard from Denisha and other sources. But I thought it best to go over it from a bank's perspective. So the first step in the home buying process is to get pre-qualified, or some people talk about pre-approved. There's a difference between pre-approval and pre-qualifying. Most mortgages that are booked in the marketplace are booked via a pre-qualification letter. Why is that? It is booked via pre-qualification letter because legally the only person who can provide a pre-approval is a loan underwriter. A loan officer can provide a pre-qualification letter. If you want a pre-approval, that information package that you present your loan officer must be prepared and forwarded to an underwriter for the underwriter to do their due diligence. Now, so we will talk about pre-qualifying this evening. This allows you to find out how much money you may be able to borrow. It lets realtors and home sellers know that you're a serious home buyer. It allows you to bid with confidence on the home you want. The pre-qualification letter is typically valid for 90 days. It is prepared by a loan officer and can be provided within 24 hours depending on the officer's workload. The rate on the pre-qualification letter may change until you lock in the rate during the final application process. Pre-qualifications are based on a preliminary review of your credit information only. It is not a commitment to lend. In order to get pre-qualified or pre-approved, you must provide your prospective lender with a number of items, articles, documents. These include your driver's license, copy of the most recent pay stub for 1 month, for all jobs, for salaries and commission, previous 2 years W-2s for all jobs, salaries and commission, previous 2 years personal tax returns. If self-employed, provide your 1099s and Schedule Cs, and we also ask for profit and loss statements if it is after the first quarter of the year. You are asked for 2 months, 2 most recent months of bank statements. And if those bank statement has any deposits greater than $1,000, the underwriter has the right or privilege to ask you to source those monies. Also could be used or can be used in the transaction are your 401ks and 403bs. These are not used within the transaction in itself, but they can stand and serve as reserves. Now, most recent investment account statements verify, in order to verify your dividends and interest. If you are a Social Security recipient, we would like to have a copy of your award letter. If you're on pension or any form of disability, those award letters or documentation or proof can be, should be provided. If you do receive alimony or child support and you need these monies to help you qualify, you are required to provide evidence and proof of that. If you are using child support, you must provide at least 9 of the last 12 months of proof that you have been receiving child support. This child support, it would not be recognized if it is not court-ordered. So the child support that you wish to use in the qualifying process must be court-ordered child support. Now, gifts money can be received and accepted in any amount. Different mortgage programs, however, has minimum payment required of own monies. For example, some ask for 3% of your own money, some ask for 5%, and many affordable mortgage programs, depending on the type of property you are buying, would require 1.5% or 3%, as the case may be. Gifts must be sourced. What I mean by source, you must provide a copy of the canceled check or a bank statement showing an ACH transfer or wire transfer from the donor to the receiver. If it cannot be a gift cannot be provided in the form of cash, because cash cannot be sourced. Now, credit is what the underwriters use to review how well an applicant managed his or her current and prior debt. When multiple borrowers are involved, the borrower with the lowest medium score is the one that is used as a representative credit score. Example, you and a co-borrower are applying for a mortgage. The co-borrower has a lower score than you, then the lender would use the score of the co-borrower because he has a lower score than you. Why is that? Because issuing a mortgage is based on the amount of risk. Your lower the score, the higher the risk. Therefore, we use the borrower with the highest risk in order to determine whether we will give you or grant you a mortgage. It's a good idea to review your credit report periodically to keep track of your credit reporting. Credit reports are typically valid for 90 to 120 days, depending on the mortgage program. Lenders use your credit score to determine how much risk that they may assume if they lend you their money. What to do if I have insufficient credit? Or insufficient credit is also known as having a thin credit file. Credit scores exceptions are made for those borrowers with insufficient traditional credit history. These exceptions are referred to as non-traditional or alternative credit. If you do not have a traditional credit, meaning you do not have at least 3 credit scores, the minimum, you can still apply for some, not all, some mortgage programs by providing at least 3 sources of non-traditional credit. These sources can be, these 3 sources must be: 1, housing related; 2, utility company; and 3, any other reasonable credit or lease product or service. What do we mean by housing related? mean cancel apartment rental checks or electronic bank records documenting timely payment to the landlord as the payee. What do we mean by utility? Any utility, gas, electric, and one new one that has been added to the list within the past recent years is your cell phone bill. Any reasonable purchase or lease can be anything like insurance, your car insurance, your house insurance, any service or product that you pay for at least a minimum of 12 months, and you can provide records to show that these things are being paid on a timely basis. No collections or judgments. When we are using alternative credit, lenders do not recognize or would not accept you into their program if you have collection or judgments within the past 24 months. Assets and down payment options. What are these? These are your personal savings. These must be seasoned for a minimum of 60 days. Large deposits must be sourced and documented. What do we mean by seasoned for 60 days? The lender will require bank statements, at least 2 months, 2 recent months of bank statements. 2 months of bank statements will cover a 60-day cycle. That's what we mean by being seasoned for 60 days. You can also use withdrawals or loans from your 401k or 403b in your mortgage application. Gifts, 100% of gifts can be 100% of down payment can be in the form of gifts for certain mortgage programs such as FHA. However, conventional mortgage do require you to have for you to satisfy an own money requirement. Now, for conventional mortgages, gifts may be as any amounts, as long as you satisfy your own money requirement. If a gift is 20% or greater of the purchase price, borrower, however, does not need to contribute any of their own monies. Gift letters and proof of transfer of the gift must be executed. Grants, you will hear a lot about grants later, but these are available from unions, community development corps, City of Boston, mass streams, etc. Gift of equity, what is this? A gift of equity is if you have a parent or a relative who is willing to sell you their property and willing to give you at least a 20% stake in all of the purchase price. Now, if your relative give you a gift of equity of 20% or more, you do not need to come up with any of your own money. Seller's option for closing costs, which is called a seller's credit or seller's concession. These are different ways in which you could close on a transaction without putting any further monies in the transaction, because the seller can give you these concessions to cover your closing costs. Now, other forms of down payment options would be Section 8 for home ownership, housing choice voucher, which we will discuss later. Other forms are Christmas clubs, susus, turns, hands, meetings, and other forms of savings clubs that can be used. Income. These are all types of income that you're aware of. Wages, salaries, tips, bonuses, vacation, severance, interest, etc. Certain types of disability payment. Unemployment compensation is only considered for persons who are involved in seasonal employment. Regular forms of unemployment is not considered valid qualifying income. Alimonies, child support, Social Security benefits, dividends on veterans enforced policies, welfare payments, and workers' comp. These are all forms of incomes that can be counted. Now, taking on a loan in order to purchase a house is a form of debt. This debt is called what we call the housing debt. The housing debt plus all the other debts is called the total debt. Now, the housing debt is comprised of principal, interest, taxes, and insurance. When we take the principal, interest, taxes, and insurance and add them together and divide them by your monthly income, we call that the housing to income ratio. Now, when we take the housing debt and add them to all other types of debt, we call that, and divide them by your total income for the month, we call that the total debt to income ratios. And those two numbers are what lenders use to determine whether you will be approved to purchase a house or not. There are many different debt to income ratios that you hear about. A typical one is 38 at the front end, 38 meaning housing to income ratios, and 45 at the back end. But those are not consistent with all mortgage programs. It depends on the mortgage program that you are pursuing that determines the debt to income ratio that you will be evaluated on. Down payment programs. The best mortgage program for first-time home buyers in the marketplace is Mass Housing Partnership, MHP mortgage. It provides a loan, it backs a loan called the One Mortgage. Why is it the best? Why do I say it is the best? It is the best mortgage program in the market, bar none, because one, it has the lowest fixed rate interest in the marketplace. Interest rates are offered by participant banks at fixed rates discounted by at least 30 basis points. Low minimum down payment. These programs require 3% down on condos, singles, and two-family properties, and 5% down on three-family properties. For those properties that require 3% down, half of that must be your own money. The other half, or 1.5% of the purchase price, can come from any other source. On three families, of the 5% down payment requirement, only 3% need to be your own funds. Another very impactful quality of this program, the One Mortgage, is that it has no private mortgage insurance. So you can be putting down as little as 3% and is not assessed mortgage insurance. That's huge, because in another mortgage program for the same loan size, you could very well be paying $400 or $500 per month more, because private mortgage insurance depends on your credit score, depends on your loan size, can be very expensive. So no private mortgage insurance is a huge advantage that persons qualifying for the One Mortgage has over persons who are ineligible, who are not eligible for the One Mortgage. Fourthly, eligible borrowers, meaning those borrowers whose income are below 80% of area median income, you will have the opportunity to have your mortgage subsidized for the first 8 years. However, your total income must be below 80% of the area median income. If your income is higher than that, you will still benefit from the lower interest rate and all the other qualities that we discussed, but your mortgage will not be subsidized by MHP for the first 8 years. Borrowers purchasing three-family properties and borrowers with down payment greater than 20% are not eligible for the MHP subsidy. What is happening here? Come on. Why are you frozen? Okay. Okay. How do we qualify for this? Who is eligible? You must be a first-time home buyer, defined as those borrowers who have not owned a home in the prior 3 years. All household members, including the mortgagor spouse, fiance, domestic partner, or any person age 18 or over who expects to occupy the property must be first-time home buyers. Even though they are not going to be on the mortgage application, their income must be declared because there is another threshold that must be satisfied for these programs. It's called compliance income. So in order to qualify, you must qualify for compliance, meaning your income, the total household income must be under a certain or within the household limits for compliance, but only those going on the mortgage application income will be required for underwriting purposes. Now, this property must be utilized or used as a primary residence. A homeowner's failure to use a property as his or her primary residence at any time during the term of the loan will constitute a violation of their obligations under the one mortgage, and the mortgage can be called. Household income requirements, I just mentioned that. The annual income of all adult household must be within the program income limits for the community where the program is located. What do we mean by that? The household income limits are based on household size and the county or the county in which you will be buying. Therefore, Suffolk County has its own income limit, Middlesex County, Essex, et cetera, et cetera. Some of these income limits do overlap. Therefore, you'll find some cities within Suffolk County having the same income limits per household as those in, let's say, Essex or Middlesex County or Norfolk County, as the case may be. Now, what are the benefits of the one mortgage? For those persons whose income is less than 100% EMI, you can receive a grant of 5% of the purchase price up to $50,000 for a condo, single family, two family, or three family if buying in the city of Boston using the one mortgage program. I repeat, for households incomes that are less than or equals to 100% of EMI, you are eligible for a grant of 5% of the purchase price up to a grant of $50,000 for a condo, single, two family, or three family. These loans can be used for a down payment or closing costs. One thing that I should emphasize there, the word is up to $50,000 in this particular program. We spoke about income limits. Here is a snapshot of what the income limits that just came out last week looks like for Suffolk County. So for a household of one, the income limit is $107,600. It is up about $9,000 from last year. If your income is 80% or below, that means you are in the 80% EMI. So if you're in the 80% EMI, looking to get the monthly subsidy, your income cannot exceed $86,050. For a household of two, you will not get a subsidy if your income exceeds $98,350. but you will still be able to participate in the one mortgage program with your income up to $122,950, and so on and so on, up to a household of 8, where the household income can be as high as $202,850 and as high as $162,250, and still get the monthly subsidy from MHP. Now, the One Plus mortgage program offers first-time home buyers, low to moderate income, a discounted fixed rate interest rate, a low down payment, no private mortgage insurance. These are the same criteria for the one mortgage. So what is the One Plus Boston? The One Plus Boston is using the one mortgage to purchase property within the city of Boston. Whereas the one mortgage program can be used throughout the 351 cities or towns in Massachusetts, the One Plus Boston mortgage can only be used in the city of Boston, only be used for city of Boston residents or persons currently working in the city of Boston, or that you can prove that you were a city of Boston resident in the past 2 years. So this program, the biggest difference, the only difference of this program is that of the $50,000 that you be eligible for, that you be eligible to receive, as like in the MHP one mortgage, part of this $50,000 can go towards buying down your rate, can go towards rate reduction. For example, if the rate today is 5.5%, the regular market rate is 5.5%, the One Plus Boston mortgage program would allow you to buy down that interest rate by either 1% or 0.5%, depending on your income, to either 4.5% if your income is under 80% AMI, or if it is 100% AMI, you can only buy it down by 0.5% using 2.5% of the purchase price. So let's recap that. You're eligible under the One Plus Boston to buy or to get a loan in Boston, on property in Boston, with an interest rate reduction of 1%, with the city of Boston paying 5% of the purchase price. So your rate will be bought down by 1 full percent from what the daily rate is. If your income is over 80% of the AMI, then you will only be eligible to buy down that rate by 50 basis points of 0.5% using 2.5% of your purchase price from the grant monies. Another form of rate reduction can be found in, or can be had from, the Mass Dreams program, and we will talk about the Mass Dreams later. So you have two sources of buying down your rate, which is very, very critical, very, very crucial, very, very an excellent way to get into a low rate mortgage, especially in this high rate environment. So as the example I give just now was, you can buy down your rate from 5.5%, 1% for those persons 80% or less, or 0.5% for those over 80%. Now you can do an additional 0.5% rate discount using Mass Dreams mass drains monies. Therefore, even in this high rate environment, you can still, or you may still be able to get a loan for an interest rate of 4%, which is unheard of anywhere else. Now, that we were discussing the mass housing one mortgage and the mass housing one Boston Plus. Another great program for first-time home buyers is offered by Mass Housing Finance Agency, which is another quasi-state agency that offers various benefits to first-time home buyers. And this Mass Housing Finance Agency has a suite of products, not one, but they have about 8 different programs catering to different buyers with different characteristics. Now, the best program in this suite is called the First-Time Home Buyer Conventional Financing. Why is it the best? It is the best because it has the lowest mortgage insurance. Unlike MHP1, all of these products have mortgage insurance. But this particular one, this has a discounted, meaning, what do we mean by discounted? It means that the mortgage insurance using this program is lower than the regular premium insurance that would be charged by other programs. They have their own income limits. However, these income limits, the difference between these income limits and the income limits from what we previously discussed under the MHP1, these are household limits. Sorry, these are borrowers' income limits, not household. So the MHP1 and the MHP1 Boston Plus, there are household limits. These are borrowers' limits, and they are much higher. They are much higher than the MHP1. So those persons who may not qualify or who may be ineligible for one reason or another to qualify for the one mortgage, you have another shot at getting a great mortgage program using the Mass Housing Agency First-Time Home Buyer. Now, the credit score required on this one is 640 across the board. If you're buying single family, you are required to put down 3%. And if you're buying a 2 to 4 family, you're required to put down 5%. Now, first-time home buyer program designation does not apply in these following cities: Boston, Somerville, Lynn, Everett, Fall River, Cambridge, and Lawrence. What do we mean by that? Is these programs are for persons who satisfy the definition of first-time home buyer. But even if you have been a homeowner within the past 3 years in these 8 cities and towns here called target areas, you would still be eligible to participate in this particular program. I told you there are about 8 products that make up this suite of products within the Mass Housing Finance. Next one is the Fannie Mae Preferred for persons whose income is less than 80% of EMI. These also can benefit from a discounted charter level mortgage insurance limit, and they have no acquisition limits for both purchases and refinances. However, your borrower's income cannot exceed 80% of the EMI. In this particular suite, the first-time home buyer designation does not apply. A third product is the Fannie Mae greater than 80% AMI. And this among with the others to follow use the standard premium level mortgage insurance. That means that mortgage insurance under this program will be much higher than in those previously discussed. However, the borrower's income can be as high as 135% of the AMI. Mass Housing offers two great down payment assistance programs. One is the down payment assistance 15-year fixed rate. For those persons who qualify for the previous three programs that I just discussed, and you are still short, if you're short on assets, short on down payment, you can get up to 5% of the purchase price or $15,000, whichever is less, as a second mortgage. This mortgage will cost you 2% for 15 years. 2% for 15 years. That is great that you can, if you can get $15,000 at 2% interest rate, where the going interest rate is between 6.5% and even 7% in today's market. So if there is ever a possibility or an opportunity for you to take advantage of getting $15,000 at 15,000 to 5% of the purchase price of $15,000 at 15-year fixed rate 2%, which is equivalent to $96.50. Take it and run. It is cheap money. Now, another program somewhat similar, but still very different, is the down payment assistance program of 10% of the purchase price of $50,000, whichever is less, for persons living statewide with income up to 80% of AMI. This is called the Massachusetts Housing Workforce Advantage Program. And unlike the program, the down payment assistance, the 15-year fixed at 2% for 15 years, this one is 0% deferred and due upon the sale, refinance, and or payoff of the first mortgage. Therefore, what does this mean? It means that unlike the one we discussed, where your income would, where your payment would be $96.50 for $15,000, you can get up to 10% of the purchase price of $50,000 of free money. There is no payment. It's 0%. So you do not have to make a payment on this particular loan if you are if you qualify and is eligible. Now, this is the program. This section here is the section of greatest interest to many persons. It is a relatively, but it has been around, but it has recently been revamped and is really taking the market by storm. It is a Boston Housing Authority home ownership program, commonly called Section 8 voucher or housing voucher program. Homes for rent, homes for sale. What is Section 8 for home ownership? The Section 8 program is not a mortgage program. It is a voucher program, which is paired with a mortgage program, an MHB1 or the One Plus Boston. Buyers in the city of Boston are eligible for a grant of $75,000 towards down payment assistance, closing costs, credit, and interest rate reduction. I'll repeat. Buyers in the city of Boston are eligible for a grant of $75,000, not up to $75,000, but definitively $75,000. That is huge. So any Section 8 person who has a Section 8 voucher and is interested in utilizing that voucher towards home ownership, you are immediately eligible for $75,000 down payment assistance, closing cost credit, or interest rate reduction. Now, if you're using the One Plus Boston, you will be able to use it using all three of these sections: the closing cost, the down payment, and the interest rate. If you are not using the One Plus Boston, then you will only be able to use it towards down payment and closing costs. How do I get pre-approved for Section 8, the home ownership? Eligibility requirements are: you must be a current active BHA resident, meaning you have a BHA client ID and is in good standing. That is, you are in a BHA subsidized housing or receiving housing subsidy from BHA. Minimum income requirement on the household size: household income must be at least 50% of the EMI, unless you are elderly or disabled. Employment requirement: you must be working at least 30 hours per week, has been employed for the last 24 months, except in the case of the elderly or disabled. And you are required to be consistently employed on a full-time basis for at least 1 year before commencement of your home ownership assistance. Your credit score must be a minimum of 640. You must be a first-time home buyer under the definition described previously, and you must complete the first-time home buyer's certification. There are two different types of subsidy options under BHA. One with a continued monthly subsidy from BHA. This is for single families or condos. Under this option, applicants are eligible to receive a monthly subsidy towards their mortgage for any area listed in the BHA payment standard chart. This includes many cities throughout the state. The second option is purchasing without subsidy. It is primarily used if you're buying a multi-family property in which you will be receiving rent. So the BHA is not going to subsidize your monthly mortgage payment if you are buying a multi-family, or if you're buying a 2-family or a 3-family. It will only subsidize, and by subsidize I mean pay part of your rent, part of your monthly mortgage, by only if you're buying a single family or a condo. How is the subsidy determined? The subsidy amount is determined by a number of factors, among which are the applicant's income, where they wish to purchase, as the cost of living in different cities and towns throughout the Mass varies. The subsidy is always based on the buyer's approved voucher size and the payment standard for the zip code the home is located in. For example, Boston has a number of zip codes: 02121, 02119, etc., etc. Each of those zip codes do have a different payment standard. So the subsidy that the BHA will be paying will vary from zip code to zip code, depending on where you finally end up buying. Therefore, you may qualify, let's say, for $2,000 subsidy payment if you're buying in, let's say, Roslindale, but you may only qualify for $1,700 if, let's say, you're buying in Mattapan. Those are only arbitrary examples I trope there to give you an idea of how it works. It should be reinforced that this subsidy, however, is only you're only eligible to draw on the subsidy for up to 15 years. There's exceptions only for elderly and disabled, meaning that at any point, your share of the mortgage, if your share of the mortgage equals to the payment standard for the zip code, then your subsidy could be terminated. Determining the subsidy amount. Affordability is determined by the payment standard for the area, the candidate's earned income, their adjustment to income, and their total tenant share. When we take these factors into consideration, they develop what is called the housing assistance payment. And the housing assistance payment is what represents the subsidy amount that will be paid on your behalf on a monthly basis. In short, the HAP is the amount of dollars that will subsidize the buyer's monthly mortgage payment. Another great program, which you may have been hearing a lot about, is the Mass Dreams program. The Mass Dreams program is another down payment assistance program where residents of the 29 cities and towns in the state that was considered disproportionately impacted by COVID are eligible to use funding to buy a property in any of the 351 cities and towns. And your income can be as high as 135% of AMI for MHP mortgages, up to 135% of mass housing. However, mass housing no longer offers the program. They have run out of money since last year. So the only mortgage program that currently are funding Mass Dreams application is the MHP1 mortgage. You are eligible for up to $50,000 of assistance with 5% of the purchase price going towards allocated to down payment, and your closing costs can be paid. Also, your rate can be brought down by 0.5%, by 2% of the purchase price of the funds from the Mass Dreams. So this is another way in which you can buy down your rate to a lower rate using Mass Dreams program under the MHP1 mortgage. In fact, if you did the One Plus Boston mortgage, you'll be eligible for an additional mortgage interest rate reduction using Mass Dreams 2% to buy down it by 0.5%. Great program. They also have income limits, which is determined by the programs that you will be utilizing in order to get your mortgage. In this case, unlike the Section 8 for home ownership, which has a definitive amount of money, meaning $75,000, this, like the One Plus Boston and the MHP1, has that little word, up to $50,000. That is the end of the presentation. We left about 10 minutes or so for your questions.
Hi, I'm sorry. How are you?
I am well. I'm well.
I apologize. I came in late. I just like to know, I am someone that is visually impaired. I'd like to know, are you able to please send the video and the slides, the presentations of the slides? I know someone else in the comments asked for that as well.
Yes.
There were a few things that you said that were interested, but it seems like I'm still in a kind of like in a sinkhole with a few problems, like my credit is one. And so I would like to know if you guys can do that,
Yes,
please, so much.
yes, yes. Denisha McDonald, the
Yep.
facilitator of this, will be sending this out to the participants who request them.
Yep. So
Okay, I have,
after this session, you'll get the the recording of the Zoom, and then you'll also get the PowerPoint, the PDF of the PowerPoint presentation.
oh, okay, thank you. My one question is, if someone has the Section 8 and they were to be, I'm not gonna lie, I forgot a whole lot, that was a lot of information, so please forgive me, but if I'm a Section 8 voucher holder, but if I don't have, my credit is not up there, does that still affect someone like me that can use the Section 8 to become a homeowner? I'm not sure what I'm even saying, but
No, you're right. You're
understand me
fine.
in
Very good
some-
question. You're
Yeah.
very good question. And the answer to that is you must, as I stated earlier, the Section 8 for home ownership is not a mortgage program. So you must first satisfy the requirements of the mortgage program, meaning your score has to be at a minimum of, it can't be lower than 640.
Mhm.
You have to have a score of 640 for singles and condos, and for twos and threes, your score must not be less than 660.
So
If your
rather you have
score
the
is
voucher
less than
amount, it
those
still has to be 640.
values, you will need, if your score is lower than those values, you will need to do some work to bring them up to those required guidelines.
Yes, thank you, Wilfred. So no matter what, you have to fit the requirement for the loan product. So for the lender and the banks, they want the 640 credit score. For the voucher, they have their own requirements in terms of their minimum income requirements. I believe it's like you have to make at least $50,000 to qualify for it. It's only through BHA. So if you have Metro or anyone else, this program is exclusive to BHA. You'd have to speak to the home ownership coordinator at BHA so they can give you kind of what their program requirements are and sign you up for it, because they need to make sure you qualify before they can connect you to the loan officer to go through the pre-approval process.
Well, Denisha, just one correction there. There is, you said you must have a minimum. That number was being bandied around. That is not official and it is not accurate. I have pre-approved this person only this week for a condo in Hyde Park. It was for 499,000. She is self-employed, and her income, it was $11,000. But she could qualify for that 400. The reason why, because Section 8 was paying 2250 of her of the mortgage payment. I believe the mortgage payment was only, I don't remember, I think it was about 2,800, and Section 8 was paying 2250. So and that 2250 was being counted as income as well. So you don't have to have a set income of any amount. It has to work. We do a qualifying test, including your the HAP payment, housing assistance payment, and your adjusted gross income, and that will determine how much you are how much your income, whatever it is eligible to buy. I did have a success story I presented for the FDIC last month, with a success story of this person who lives in Dorchester. She grew up her whole life in Dorchester. She works with the Boston public school system. Her income was 46,000, and she was able to buy a brand new constructed condo in Dorchester. And her income was only, it was 46,450. So there's no income limits. The numbers must work. That's all that matters. And if the lower your income, the higher your HAP payment is, and that can offset the requirements for the income.
Perfect. Awesome. So
Is there
you guys
anything
have
for Metro Housing?
Metro Housing, unfortunately, no, this is only for Boston Housing, Boston Housing Authority recipient. Metro Housing participant, however, you can participate in the One Plus Boston and the one mortgage. You will not be eligible for the 75,000. You'll be eligible for the up to 50,000.
You should make that a song, up to.
Yes, up to.
I'm gonna go over the questions in the chat. I answered some of them, but I want you as the loan officer to give those. N Santiago, you have your hand raised. Do you want to ask your question?
Yes, as it's in regards to the Section 8 voucher holders. If you have registered for the Family Self-Sufficiency Program, is that part of the steps for the application, or is that something completely different?
Denisha, did you hear that question clearly?
If you registered for the Family Self-Sufficiency, so the FSS program, is that a
Yep.
requirement or?
Correct.
No,
Is it
no, it is not a requirement, but it's good to have because the FFS funds can go towards your down payment.
So it's good to have.
Okay.
I would say do it because that's.
But they are two separate programs. So you said to reach out to, if you are specifically a BHA voucher holder, to reach out to somebody specific, because it sounds like those are two separate paths, I guess that's what I'm trying to say.
Correct, yes, because the FSS, you could be saving money to go back to college, to buy a car. That's more general savings, whereas this is specific to home ownership. So what I'm gonna
Okay.
do is I can send, after this meeting, I'll send it to Desiree. So for the Boston Public Library, the contact information for the person who's spearheading the home ownership piece for BHA. So you guys
Okay.
reach out to them directly to figure out
That
who
would-
your counselor is, that process started.
That would be awesome. Thank you very much. And this presentation has been amazing. Thank you.
Yay, thank you. Okay, so in the chat, you talked about the pre-qualification is valid for 90 to 120 days, I believe. So someone was asking why that range?
Okay, the reason for that is a credit report is valid only for 120 days, 4 months. After 120 days, it expires. Now, the reason why we say 90 is because if you have a credit report pulled, and then let's say you found a house in the very last month or going to the last month, month 3, it takes about 30 days to close a loan from application to closing. So if you found a house at year 85 or 86 or so, around the 90-day mark, and it takes you 30 days, then that is 90 plus 30 is 120. So that's why we say 90 to 120 days. And that is determined because a credit report is valid for 120 days.
Perfect. We talked about, they asked about the one mortgage. So you guys saw on that slide, I'm not sure if you can go back to the slide on the income qualifications for the one mortgage. Right there, okay. So these numbers, again, it varies by your household size. So if you are single, 1-person household, there are 2 tiers, right? So you have the 80% bracket, because there would be certain benefits at that income tier, and then there's 100% income bracket. So whichever one you fall into, you can be at or below that number. So if you are at $106,000 for your income, you qualify. If you're at 107,600, you qualify. If you're at 108,000, you do not qualify because now you're over income.
No. If you're 107,601, you don't qualify.
But if you're over, you
Yes.
don't qualify.
You
So
don't.
you have to be at or below these numbers. So there's strategy
Exactly.
involved even within this. If you know you have so use teachers, for example, they have pay increases. It's scheduled every year. It's like, if you know you're about to be over income, you need to get the process started to see if you can buy and close before your income gets to that next tier, because they check it up until the day before you close. And if your numbers go up, Doesn't work. It's all in timing. So there's strategy involved in this. And just understand you need to be at or below. So even if you're at $50,000, you qualify, right? Because you're below the 80 and below the 100% area median income for these. These numbers are specific to Suffolk County. So we're looking at Boston and some of these other areas, but each county has their own requirements. So if you're looking at Plymouth, the numbers are going to look different than what you see here. So it just
Yes,
depends on
the numbers for Plymouth will be much lower. Plymouth has some of the lowest numbers. For example, just to give you an example, Plymouth County, for a household of one under the 80 income limit is 69,600. And for the 100% limit, it is 87,000. It is 87,000 even. So that's a huge swing there, a $20,600 dollar swing there between Suffolk and Plymouth County, just as an example.
Yeah, there's a difference. So you have to pay attention to that as well. And then another question was isn't it that anything under 20% down payment requires PMI?
Yes, the traditional conventional mortgage, you will find Freddie Mac and Fannie Mae requires PMI for any down payment less than 20%. You'll find some banks, however, has their own portfolio products that does not require that. They require lower down payments. But generally speaking, if you're doing a Freddie Mac, Fannie Mae conventional mortgage, it is 20% or you'll be assessed PMI. The only program that you would not be assessed PMI is, again, the one or the One Plus Boston. Only two programs on the market to which you do not have, which you are not required to pay PMI.
Perfect, thank you. And I know
and Denisha, one thing I would like to say here, I missed out one of the down payment assistance program. We at Needham have recently started to offer the Federal Home Loan Bank down payment assistance program. What that is, it is additional funds out there for persons, first-time home buyers, low to moderate income persons of up to $29,000 in funding. Therefore, that's another. Say that again.
Is that a grant or a loan?
That is a grant.
Free money.
Free money, yes. Free money. That's another part of not a part of free money, but not all banks do it. And you should ask any loan officer you're working with if their bank participate in the Federal Home Loan Bank down payment assistance. As I said, that's $29,000 there that can be added.
Perfect.
One other thing I would like to say to these class participants is that as first-time home buyers, and as first-time home buyers buying in the city of Boston, when you are ready to purchase a property, I know sometimes your family, your friends, your realtors, your attorney, and so on tells you to go to this lender or that lender, the next lender. When you do that, when you begin to make your rounds, one of the first things you should ask any lender who you approach is, do you offer the one mortgage? If you're buying in the city of Boston, do you offer the One Plus mortgage? Does your bank offers the mass housing program? Does your bank offers the mass dreams? And does your bank offer the the Federal Home Loan Bank down payment assistance? Those are all very pertinent questions that will benefit you and save hundreds of dollars per month in your pocket.
Yep.
If you choose the right lender.
And it's okay if they don't have it, because we always recommend you get a quote from at least 3 lenders within, a week. So if the person that your family is like, they're the best loan officer ever, I love them, they help me buy a house, they help your sister buy a house, everyone, you get a pre-approval from them, but you're looking at all of what they have to offer. Because if they're great, but they offer you 0 money in down payment, and then you go to another lender and you could get up to 100,000 when they combine all these things, then now you have a choice to make, right? So you're evaluating what everyone has and you're making an informed decision before you move forward. It's very important that you not just go with, because your sister said, use this person. Because I've had a few people where they get pre-approval and it's like, you have to put down the full 5% and they don't give you any down payment assistance. Whereas if you use the One Plus Boston for this same purchase, look at that, you're qualified for, I've had someone, she's at 60,000 right now in terms of all of her assistance coming towards her purchase. And I had someone who closed and they got, I think, $90,000 by combining the One Plus, like all of these different grants. They were able to combine all of that. By using the One Plus Boston with Mash Dreams, technically you're getting 10% in down payment funds
Correct.
automatically.
Correct.
That's money going straight to you as a grant. So your house is 10% more affordable. We'll put it that way.
Correct. Correct.
So it helps to ask these questions to people.
It is quite possible that persons, first-time home buyers, low to moderate income buyers can get upwards of $160,000 towards a particular transaction if they're buying, depending on where they're buying, the type of property they're buying, and the programs that they are bundling together in order to get down payment and closing cost assistance.
Bundle and save. So here, another question is, do you have to be a citizen or are there citizenship requirements to qualify for the one mortgage? I didn't know.
Well, yes, you can participate in a mortgage if you have if your immigration status is validated. For example, the H-1B status, we do underwrite mortgages for persons carrying that status. So that is a question which you should ask your lender. Remember that the one mortgage and the One Plus Boston mortgage are what we call portfolio mortgages. Those are mortgages. What is a portfolio mortgage? Is a mortgage that is owned by the specific bank that is issuing. And that particular bank, because they own that paper, that particular bank can determine what immigration status that they would be comfortable lending to. For example, I know some banks used to offer, used to underwrite business for people with TPS, temporary protected status. Other banks did not. Some banks may not want to underwrite business to H-1B status. Other banks, some banks will. So it is, you should again shop around if you have that kind of, if you are not a citizen or a permanent resident. That does not mean that you will not, that you're not eligible to get a mortgage or to get any of these special mortgages.
Perfect, thank you. Next would be, what does buying down your rate mean? How much, like what's the most that you can buy down your rate with these programs?
Okay, buying down your rate meaning you are paying a percentage of the purchase price to get your rate down lower. For example, the interest rate on the one mortgage today at Needham Bank is 6%. Now, if you're using the One Plus Boston mortgage, that program will pay, if your income is up to 80% of the AMI, that program will pay 5% of the loan amount to enable you to buy your rate from 6% down to 5%. So that's huge. That is that 1% drop makes a big difference in your monthly payment. So that's what buying down your rate is, getting your rate from a high interest rate to a low interest rate by paying some monies, and that money, those monies are what we call points. Now, at this, I would advocate persons paying points if the money that they're paying points with is free money, like Mass Dreams money or the One Plus Boston monies. However, if it is monies that you are paying out of your own pocket as a ethical, conscientious loan officer, I do not recommend that you pay points to buy down your rate, especially in this high interest rate environment where you know that between now and the next 5 years, interest rate will be falling. There's no ifs or buts. Interest rates will not continue at this level or higher between now and the next 5 years. So why use monies to buy down a rate that you know that will come down or will be coming down within the next X amount of years? And that is the advice I gave to this person who called me today. He is doing a loan for 1.1 million, and he was going to be paying 13,000 to buy down the rate by 1%. I told him that's crazy. You don't pay 13,000 to buy down a rate that you know will be coming down within now in the next 5 years. Not a good use of your money.
Gotcha. Thank you. Then someone asked here, what if you are above the 100% AMI? What options are available for those first-time home buyers?
Well, that is when you would take a look at the Mass Housing Finance Agency suite of products. As I said, it is not as great a program as the one more MHB1 because the interest rates are not as low. You'll be paying mortgage insurance, and you're not eligible for mass dreams funding. But outside of those three factors, Mass Housing Finance Agency suite of products is very competitive out there in the market.
Perfect. And then, so you have the mass housing product. If you, again, you're speaking to different lenders, they may also have FHA. So that's an option for you as well. That's a 3.5% down payment program. You do have private mortgage insurance or PMI for that one. You have conventional. So if you want to put 5% down, you have different loan products available that don't have an income requirement. It's just a matter of if they have down payment assistance. A lot of mortgage brokers and some banks have their own, because the market's been so crazy recently, they have their own down payment assistance programs that they're starting to launch, where they'll give you, it's not free because they usually increase your interest rate to cover it, but they'll, have like a 1% down payment program, or they'll give you the 3.5% as a loan that they add on to kind of everything to get you pre-approved. So if you are above all of these numbers, let's say you're even above the mass housing 135%, you can still buy a home, and there are options available to you and down payment assistance. It's just what it looks like is different. It's not going to be this kind of $100,000 down payment assistance. It'll be more of that 3.5% kind of cap of where they would give you assistance. And I can send you guys, depending on your situation, some lenders that have those programs as well. So I know Movement Mortgage has their 3.5% down payment program. Guaranteed Rate has one right now where it's 1% that you have to pay. So different programs have, different lenders have their own products. Because the market's been so hard, a lot of people can't buy. So they're trying to figure out, how do we get people to buy homes? Let's see, someone asked, if I open a third line of credit today, will that be good for buying a house in the next 6 months?
I would say that if you are thinking about buying a house, the least amount of credit origination that you partake of is better. If you're thinking about buying a house, minimize the use of debt as much as you can. Do not open a third line or fourth line of credit. Your credit should remain as is. If it is great, if you are thinking about buying a house, the less your credit, the better it is. The lower your credit, the lower your debt, the higher amount of monies the bank will loan you, meaning your debt to income ratio would be lower. So your lower debt means lower debt to income ratio, means increased potential of approval.
Yep. So when you know you're getting ready to buy a home, you want to have a lot of your debt paid off, because the more debt you have outside of your mortgage, the lower your pre-approval, which means you're probably not going to be able to buy where you want. A lot of people are really upset when they're like, I want to live in Boston. I want to live in Boston. They get their pre-approval and it's for 150,000 or 200,000. And single families in Boston are not below 500,000, right? So it's the math between your income, so how much you make, because it's a percentage of your income goes towards housing, and then also your total debt. So you need to make sure you're planning accordingly and managing expectations when you're getting ready to purchase. And that's why we offer the free consultations to help you guys kind of figure out, like, what's the reality, like, what's my situation? And then we connect you to the lenders to help you figure that out. Someone asked, why go to 3 lenders? Why not go to all lenders? I say 3, because I think that's you do your research beforehand. You can ask a lot of questions without them pulling your credit. But the more people you have pulling your credit over an extended period of time is going to decimate your credit. So we tell people, if you're go within a 2-week block and speak to the lenders and figure out what you want. I think 3 is a number. If you did 5, it's not the end of the world, but why are you going to 10 lenders if they all offer the same program? Just ask the questions up front, so that only the ones that you narrow it down to are the ones who actually get to pull your credit and go deeper. Wilfred, I don't know if you have anything to add to that.
Yeah, one thing I could add to that is that lenders will not be able to provide you with a pre-approval or pre-qualification if they're not permitted by you to pull their credit, because we have to pull your credit if we are going to do a full and total due diligence. So oftentimes persons call and say, can you do a soft pull, or can you pre-qualify me without pulling? And the answer is no, I can't. Because I can't confirm anything that you're seeing, because I want to see the credit report. What we need to understand as well, that sometimes our credit score might be at the 640 level or mark, but the lender still has the right to not to move your application forward because of credit quality. Meaning, if your credit score is 640 and the lender sees that you had delinquencies, a lot of delinquencies within the last 3 or 4 years, the lender can say, well, your score has reached that the prescribed limit, but your quality is not what we like. Therefore, we are not going to move forward with you. So it is not only the score that the lenders take into consideration, it is the quality of that score.
Amen. So they take a look at everything. So it matters.
Yeah.
But like Wilfred said, when you're calling around, right, you do the research up front so that not the whole world is pulling your credit. Do you offer the one mortgage and the 1+ Boston, right? So you have a lender who offers those products. Do you have down payment assistance? What down payment assistance programs do you offer or do you have access to? If they have none, you probably don't want to use them because they can't benefit you. So again, they didn't need to pull your credit because you asked the questions up front and found out you don't want them. So doing the upfront homework helps you not ruin your credit, and you just narrow it down to the top 3. I'm giving 3 as a number, to compare what benefits you the most. Okay. The next question are these.
And Denisha, one, I mean, this idea just came to mind. Among those 3, you probably should choose a big bank, a small bank, and if possible, an intermediate bank, because you probably will find some disparity between the products and so on that are offered by those categories of banks. That's just off the cuff that I recognize, that I thought about just now, but I can see how the process, guidelines, procedures, and products can vary between, let's say, a small bank and a large bank.
Mm-hmm. Bank of America is a lot different than Needham Bank. Is a lot
Correct.
different than local banks. So
Correct. correct.
And most times, a lot of the local banks are the ones that are tied to the city and have the down payment assistance programs that are in line with what Massachusetts offers. So that's why it's great to just ask questions and know. And I put in the chat kind of the link to the One Mortgage and their website. There you'll find their approved lenders, so who offer their program to help you. So now you're just finding the loan officer that you want to work with. And I put CHAPA in there so that you can pick a first-time home buyer class. That's statewide. So CHAPA is for everything, and you just pick the one that works. Because if you prefer to take your class in Spanish or in Vietnamese or anything, they have all of those options on that one website, as opposed to me giving you one provider. This is where you see everyone and you pick what works best for you in terms of the date and time or how it's set up, okay? They ask if these programs are likely to change in the future. Yes. So I know for the grant, it's clearly until the money runs out. So when on Mass
Correct.
Housing, they launched the Mass Dreams last, what was it? Maybe August?
October.
October, it was gone 80 days later. It
Yep.
gone fast,
Yep,
80
yep.
days, record time, it was gone. Mass Housing Partnership or the One Mortgage, they still have funds from that Mass Dreams, but we don't know when it's going to run out. So that's why we tell people get focused and take advantage of all of these opportunities, because once the grant money is gone, it's a grant, right? It's not going to be replenished, it's gone.
Right.
Unless they get more funding. So you need to take advantage of it today, because we don't know if it'll be around, 3-4 months from today.
Correct.
When you do first-time home buyer programs, are you mandated to use their lenders? You're not mandated to use a lender for the first-time home buyer program, but the down payment assistance program, depending on what they are, it's tied to the lenders, right? So if you want to use the One Plus Boston, you need to use a lender that offers the One Plus Boston. Because if you choose a lender who doesn't offer it, they can't give you that 10% down payment, because they're not a part of that program. So
And just to interject,
Mhm.
there's a difference between the One Mortgage and the One Plus Boston. Not all banks that offer the One Mortgage offers the One Plus Boston. So if you're buying in Boston, you should specify the One Plus Boston lender, a One Plus Boston lender.
Yep. Yeah, and I would say, is it safe to assume if they have the One Plus Boston, they have the One Mortgage?
Correct. Yes.
So I would go for a lender who offers the One Plus, so that you have the option of buying in Boston. And if you end up finding a house outside of Boston, you still qualify for the One Mortgage.
Correct.
This person asks, if you do the one mortgage to get the discount, can you still pay down further that discount? So let's say it's at 5.5, you said, and the One Mortgage gives you it down to 4.5. Could you then put?
And then the Mass Dreams can give you down to 4%. I
Could
mean,
you still pay on top of that as well, or no?
the thing here is, why would you want to do that?
Just asking if they can. Their personal
mean-
decision if they want to, but can they do that if they wanted to?
The lender has an established floor that they will only allow you to buy down to that floor. So just like you hear about the conversation in the over the news now, talking about a debt ceiling. Different organizations, institutions, and different things have a ceiling. Lenders have a floor as well. So there are certain, the lender set the floor, that's the lowest rate that you could underwrite, their loan can be underwritten at. But as I said, buying down rates is not a good use of your own money.
So there you have it, folks. Then someone asked, what's the sweet spot if you're trying to save money for a down payment? One lender told him $30,000 is kind of where he needs. Others have said a different amount. What would you say, Wilfred? And then I'll give my thoughts.
Again, it depends on which mortgage programs. Many of the applicants that I deal with has between 5,000 and 20,000, and most of them falls well, instead of 20, most of them has between $5,000 and $12,000. Because, and for example, I close a loan today on this property, 545,000. She was a Section 8 recipient. Her income was about 50,000, somewhere around there. She was required to put down 1.5%, which was $8,175. That was what she was required to put down. She did put that down, so she had satisfied her requirement. She got Mass Dreams, she got One Plus Boston. Now, she also was participating in this matching funds program called Stash. And Stash gave her $12,000. Stash sent a check to her for $2,000 because we said that we would need about $10,000. They sent the check for $10,000, but because she had already put down her required amount, the bank wrote a check, cut a check, and will be mailing it out to her tomorrow for the $10,000 that Stash had sent to us to participate in her down payment. Therefore, she came out, she didn't have to take in money to closings today, and she will receive a check for $10,000 that she had basically overpaid because that is money Stash program had sent to the bank, but she had already paid her $8,175. So here you go. She has $12,000 richer tonight.
Yep. And I had a client last year when Mass Housing, Mass Dreams, they paid all of her down payment and closing costs. She got a check at closing, the money that she put into it, because you do need to come to the table with money. So you can't have zero, but you need to, submit your offer with a deposit. You need to sign purchase and sales with a deposit. So you do need to come with money, but you have the opportunity to get some of that back depending on the program that you're with. I tell people start off as your goal is $5,000. You should have at least 5. And then depending on what your purchase price range is, you need to have between 1.5% to 3% of that, right? So we can do the math. It varies depending on the purchase price. So I can't say you need to have 30,000 because I don't know what your max is.
And what you're buying, correct.
Yeah.
What I would say is typical closing costs plus escrows, let's say that's $10,000. And let's say another $10,000 for down payment. I would say, regardless of which program, $20,000 should be should get you some consideration, and the more on top of that, and put you in a better position. One thing, if you're looking to participate in these programs, your assets cannot exceed $75,000. And by assets, I mean your savings and or gift money. So a combination of savings and gift money cannot exceed $75,000 for these affordable mortgage programs.
Because if you have 75,000, they're like, there's no need, you have the money. So they want to give it to people who are unable to save that much. So that's why that's set. And then again, the number, I think it's a great idea just to speak with the loan officer. So you have an idea of what your pre-approval amount would be to set your targets. Because if you're buying an affordable deed restricted property in the city of Boston, like you really could spend like $3,000 in terms of your out-of-pocket cost because of all of the down payment assistance that there is right now. I have a young lady, like she's literally putting down less than $3,000 all in to buy a condo because she has the down payment assistance. So she has to put 1.5%. That's all she's responsible for. The condo isn't expensive. I think it's just under $200,000 that she's purchasing a 1-bedroom for. And she gets all of her closing costs and everything else paid for. So it really depends on your purchase price because it's always a percentage of that is what you need to save. Okay.
Plus closing costs.
Plus closing costs if you're not using one of these programs where it's covered.
Correct.
So let me see here. What if you don't have 3 lines of credit and you want, without opening another card, the credit cards are all paid off as well? as the car. So if they don't have 3 lines of credit and they paid off their car, what does that look like to you, the lender?
So if you do not have 3 established credit scores, so you may have one open line and any amount of closed lines, but you still have 3 credit scores, one from Experience, one from Equifax, and one from TransUnion, you're all set. So we go by your score in this particular instance. If, however, you do not have a score, you can only participate in those programs that allow for non-traditional credit. And non-traditional credit means a housing-related bill, a utility-related bill, and any other bill. But as long as you have 3 credit scores, you don't have to worry.
There you go. Okay, perfect. Will BHA really qualify you for that purchase price? Depends on your situation and where you're buying. I think those questions are on a case by case, your situation. So Wilfred, can you forward to your contact information so that if they have those, because BHA, they're not all lenders are familiar with the Section 8 to homeownership program or work with that program. Wilfred is one of the lenders who does, one of a few. So if you have questions, take a screenshot of his information so that you can reach out to him after. If you are interested in a consultation to kind of figure out the home buying process and come up with a plan, in the chat, I put my email address. It's info@ourvillageinitiative.com. You can email me and then we'll set up a consultation to kind of figure out or better understand what your specific situation is so we can put a plan together. Because sometimes it's, well, I have a 580 credit score, so I can't do anything. It's not that you can't do anything. It just means you need to repair your credit first. Let's focus on that, right? Let's focus on the things we need to focus on so you can get closer to buying a home. So that's the goal. I think that's all of the questions, because the other one is, how do you estimate how much you can afford? Honestly, I think there are calculators online if you Google them, like home housing affordability, but because of all of these down payment assistance programs, ultimately talking to a lender is going to be your best bet because there's so much money out there. Again, there's a young lady, if she goes through with it, she's getting almost $100,000 in down payment and closing cost assistance. So her purchase price is different than what is advertised because they're writing down all of that, what she's going to pay her mortgage on. So these are where it's more case by case. And I highly recommend that you speak with a loan officer to kind of figure out your situation and what works best for you.
Yes, and added to that is, although it is okay to use these mortgage calculators and so on, one of the most challenging things for even myself, a loan officer, is to calculate a person's income correctly. And I've been doing this for close to 20 years, just one year shy of 20 years. And sometimes my calculation of my client's income is inconsistent with the income that is calculated by the underwriter. And that difference can be the difference between the approval or the denial of a loan. So yes, using a mortgage calculator and so on will give you ideas, but it does not necessarily mean that that your ratios will be actually correct or even be in the ballpark, because there are some incomes that we will recognize and some that we wouldn't.
Yep.
Our calculation of income might be different. We might calculate income using year to date. We might use a job letter. We might average income over a 24-month period for per diem employees and that sort of thing. So income is a very dynamic quantity that is not easily to buckle down.
It is. Very good.
So it is, as Denisha advised, sometimes you might be wasting your time going on the calculator. You should use that time, go to a lender.
Amen. Because I'll give you an example. Young lady, she works for BPS. She does Uber and DoorDash, and something else. And she has another part-time job at Cheesecake Factory. And because of the timeline of all of these other jobs, the Cheesecake Factory just counted, like, I think last month she hit the 2-year mark for it to count. But she has to, the DoorDash doesn't count towards her income, but the Uber does. So the timing of when you do things matters, and how it's calculated matters, where some lenders, it won't count towards your income. So although you're working and you're like, but I make $80,000 with all of my income, they're like, well, we're only counting $60,000, right? That can hurt you in terms of a pre-approval amount. So it makes sense to talk to a lender so you know exactly what's going to count and what's not.
One other bit of advice is we can improve our debt to income ratio by paying down debt, as alluded to earlier. However, please, before you start to pay down debt, talk to a loan officer first, because let the loan officer advise you and direct you which debt to pay down, because you go and pay down debt, you may be paying debt that does not need to be paid off. Because, for example, in installment debt that is less than 9 months to maturity, the bank ignores that anyway. So why are you going to go and pay $20,000 off that is going to be ignored by the lender anyway? So always, again, don't be shy, call up your lender, consult with your lender, because the lender may be able to save you $20,000 to eliminate a $500,000 car loan. A $500 per month car loan. You go and pay it off because you didn't know any better. You short yourself by $20,000 that you could have been using for your down payment.
Amen.
All right, I had my hand raised. I had a question. I hope I can ask it in a good way. Like my mom is a BHA resident and she wanted to get a townhouse or something like that. But if she can say if she was in one of these programs and she has a voucher as well. If she's in one of those programs or something like that, can she put someone like me? I don't know how the mortgage thing really works. So I don't know if it will be mortgage or rent that she would be paying in a single family home. Could she put someone like me in there, especially if she's a cancer patient and something happens to her? What
Okay, let me answer that for you. Are you on the voucher? Are you on her tenant share?
No, I am not. I'm Metro. She's BHA, but she's been wanting to get into.
Okay, if
one of
you're
these
not,
programs.
and you, well, what the tenant share determines is what voucher size that you are eligible for. So if her voucher size is 2, then nothing prohibits you from living in the property with her.
Mine
they
is
will-
2 as well, but I'm just saying, like, if something does happen, what do they just say, okay, well, that person's no longer around or something, so we can't give it to the family member that's name is also on the I just don't know how this works. So
I
that's
think, okay, so are you assuming, God forbid, mom passes, what happens to you if you are able to take over the home? Is that the question?
Yes, I like to know. I'm not wishing on that or anything.
No,
but
I know.
but she's been wanting something like this, including myself. But I just thought about that because I can't deal with a neighbor on top of my head.
No, I got you. I think that would be reaching out to the person at BHA to figure out what their requirements are for that. 'Cause
Okay.
I don't wanna, there's some things where I'm like, logically, I think this is how it would go. I don't know what their requirements are in that instance, so I would defer to reach out to BHA and have them tell you how it
Okay,
works.
if you would take this number,
Oh, hold on.
802,
Hold on. Oh my God, out of all the pens. I'm sorry, hold on. Yeah, I'm having a little pen problem lately. Okay, what is the number?
802,
Eight,
310,
872.
no,
802.
802, 802.
802 310. Okay.
7387.
802-310-7387.
Yep.
Yes.
And the name is Megan, Megan.
Can you say it again?
Megan,
Oh,
I'm gonna put it, say it, Wilfred, and I'll put it in the chat. Megan, and what's her last
Megan
name?
Ryan. She's a senior advisor in the BHA,
I got it.
and she should be able to help you, direct you along what you need to do. And while you're at it, you can tell her that you're interested in the Section 8 to home ownership. That you would
Yep.
like to know.
Thank you both for your patience with my questions and understanding it. I'm gonna get on it because I was supposed to be doing my self-paced training now. So thank you so much, and I look forward to
No,
the video
thank you. I mean,
presentation.
we've gone over because we wanted to make sure you guys got your questions answered. So one more, I think, N Santiago has a question, and then I think we'll end for the night.
Okay, thank you.
Thank you.
Thank you very much, and thank you for taking the question. I just wanted to get some clarity on what Wilfred said a few minutes ago in regards to the 3 types of credit. Do you mean 3 credit scores from the 3 bureaus, or 3 separate forms of a credit line, I guess?
No, well, let me try to clarify. The typical borrower is required to have 3 credit scores. You call it a tri-merge credit report. Tri-merge because they are pulled from 3 separate
The
credit
top 3
bureaus
credit reporting agencies, right?
credit bureaus on one report. Equifax, Experian, and TransUnion. If you have 3 credit scores from those 3 credit bureaus, you do not have to worry about lines of credit, because in order to get a score, you would have had to have lines of credit at some point in time, even if you don't have any right now. Now, if you do not have 3 credit scores, you can still, or you may still be able to originate or to apply for a loan and be approved for a loan. Not all under all programs, but under some programs, more especially the affordable housing programs. Those programs allow what is called alternative credit or non-traditional credit. And non-traditional or alternative credit is comprised of 3 different forms of credit. A housing related debt, meaning for first-time home buyers, rental. You must be able to show that you paid rent either by a credit card or, no, sorry, not a credit card, a cancel check or direct deposit from your account to the landlord's account. I know I have a property out of state. I have a property out of state, and my tenant pay his rent through Zelle. I mean, those are all forms of proving that you pay, that you have a housing debt. Then the next type of debt that is acceptable is utility, gas, electricity, cell phone, telephone, anything, any utility within the house. And the third one is any other line of credit, like a car, let's say a car insurance or a house insurance or some other lease arrangement or finance arrangement that you can provide documentation for at least 12 months. That is what I
Okay.
meant.
Thank you very much for that clarity, because I think I was thinking of it very differently. I thought you meant 3 credit lines, but that's very different. So thank you. I appreciate that.
Yep.
Perfect. So thank you everyone for joining us. Thank you for those who stayed on to get all your questions answered. Wilfred's contact information is on the screen right now. If you guys have any kind of general questions, you can reach me at info@ourvillageinitiative.com. I'll put that in the chat as well. So you can email to set up a consultation. We figure out, kind of put a plan together for you. Happy to do that. Desiree from the library will send out this recording and a copy of the presentation, so you guys have the slides to review later on as well. Thank you, Boston Public Library, for this opportunity. We look forward to seeing you guys next month, where we put it all together. Come up with kind of looking at now you're building your team, right? So you've learned all the things about your credit, about budgeting and saving, about the lender and the different loan products. Now let's put it all together. So next month is when we bring it all home and you guys have your action plan to move forward with going into the summer. Okay, so thank you. Have a great evening and have a wonderful rest of your week.